Assalamualaikum. Myself Mohammad Nilamia. Today I am going to present an overview of Bangladesh Bank's latest monetary policy for July to December 2025, first half of fiscal year 2026. These policies mainly focuses on controlling inflation, stabilizing the exchange rate, and ensuring financial stability. Before starting the main part of the presentation, we should have some basic knowledge about what is monetary policy and its objective and how it actually works for having a better understanding on the recent declared monetary policy by Bangladesh Bank. So let's start with knowing what is monetary policy. Monetary policy, as we know, is the process by which a country's central bank, like ours bank, Bangladesh Bank, controls the supply of money and credit in the economy to achieve certain objectives. There are some basic objectives such as price stability, means controlling inflation and avoiding deflation. And second one is promote economic growth, means supporting investment and production. And third one is employment generation, which ensures more job opportunities. And fourth one is balance of payment stability, which maintains external trade and extra exchange rate stability. And the fifth one and final one is financial stability, which ensures smooth functioning of banks and financial institutions. Let's know how it actually works. It works by using some monetary tools and policies. The central bank uses monetary tools like quantitative tools and qualitative tools. Quantitative tools include changing interest rate, open market operation, reserve requirement, and which controls money supply in the economy. Qualitative tools include credit rationing and selective lending policy to direct credit into productive sectors. Well, let's know the policy uses by central bank for controlling money supply in the economy. First one is expansionary policy, which decreases the interest rate, resulting in increasing in money supply in the economy, which encourages the economic growth and development and by increasing employment in the economy. Second one is contractionary policy, which increasing the interest rate in the economy, resulting in reducing money supply in the economy, which eventually controls or handle inflation in the economy. So after having the basic knowledge about the monetary policy, let's jump into the main part of the presentation. The monetary policy statement is an important guide for the economy, as we have understood from some previous slide. For July to December 2025, Bangladesh Bank has adopted a cautious stance to address rising inflation, currency pressure, and risk in banking sector. The key objective is to balance growth with stability while ensuring public confidence in the financial system. Let's know the summary of this policy declared by the Bangladesh Bank. The stance is contractionary, meaning it focuses more on reducing inflation than stimulating growth. The repo rate has been kept at 10% as same before, with the inflation target set below 7%. At the same time, credit growth is being carefully controlled to reduce pressure on prices and the exchange rate. Let's know the changes compared to previous policy. This one places a stronger emphasis on exchange rate stability and financial soundness. credit growth targeted are lower, and the central bank has committed to protecting reserves. In addition, banking supervision has been tightened, guidance for mergers and risk-based monitoring. The tools used by Bangladesh Bank. uh, To achieve these goals, Bangladesh Bank applies a range of tools. These include policy rates such as repo and reverse repo, open market operation in government securities, and intervention in the foreign exchange market. Reserve requirements such as CRR and SLR, as well as standing facilities and forward guidance, are also crucial to manage liquidity and stability. Let's look into suggested reforms. Looking forward, several reforms are needed to strengthen the effectiveness of monetary policy. This includes improving monetary transmissions so that interest rate changes actually reaches borrowers and lenders, fixing weaknesses in banking sectors and managing exchange rate more flexibly. In addition, better coordination between monetary and fiscal policy is needed while supporting SMEs and productive sectors for sustainable growth are needed. In conclusion, we can conclude that the July to December 2025 first half of fiscal year 2026 monetary policy aims to strike a balance between inflation control and economic stability. While short-term growth may be slow, these measures are necessary for long-term sustainability. As Bangladesh Bank emphasizes, a tight policy today can ensure a stronger and more resilient economy tomorrow. That's all for today. Thank you everyone. We'll see you on next video.